Ladies and gentlemen, good day and welcome to the NCC Limited Q3 FY 2021-22 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from DAM Capital. Thank you, and over to you, sir.
Thank you, Bikram. On behalf of DAM Capital, I welcome you all to the Q3 FY22 earnings conference call of NCC Limited. Today, we have from the management, Mr. YD Murthy, Executive Vice President, Mr. Krishna Rao, Executive Vice President, Finance and Accounts, Mr. P.V. Vijay Kumar, Vice President Finance, Mr. K. Durga Prasad, Joint General Manager Finance. Without much delay, I will hand over the call to the management for the opening remarks, which will be followed by Q&A session. Over to you, sir.
Thank you, Mohit. Good evening to all the participants, and also I welcome my colleagues who are in this conference call from the management side. We'll make some opening remarks and advise you what has happened in the third quarter of FY22. Before that, I would like to scan the macro environment and tell the opportunities that are unfolding for a company like NCC. As you all know, the budget for FY23 was presented by the Finance Minister on 1st February 2022, and it is a growth and development oriented budget with special emphasis on public capital investment in infrastructure. The capital allocation has gone up by about 35.4% for the next year, that is FY23, to a level of about 7 lakh crores from a level of 5.5 lakh crores in the current financial year. That is almost 2.9% of the GDP. And so the government is focusing a lot on infrastructure development, not only to kickstart the economy, but also to create substantial job opportunities and also good demand for downstream industries like cement, steel, and other manufacturing industries. The Finance Minister was on record saying that in FY23, the road construction activity will be of the order of 25,000 kilometers as compared to about 10,000 or 11,000 kilometers in the current financial year. That is a big jump as far as road construction is concerned. Likewise, she also announced 4 multimodal logistic parks, 100 cargo terminals, and 8 ropeway projects. They call it the Parvatamala. So all these measures by the government will support the economy and see that Indian economy will go into a growth trajectory and reach that $5 trillion target in the next few years or so. They are also talking of the Holy Trinity, the holy important things for next year. That is one is NIP, that is National Infrastructure Pipeline. Number 2 is the PM Gati Shakti. Number 3 is the enhanced capex in FY23. All these 3 put together are expected to take the infrastructure business of the country into a higher orbit of growth in FY23. So for example, for road transport, they have allocated about 1.9 lakh crores in the budget, out of which 1.34 lakh crores will be given to National Highway Authority in FY23. Thereby, the debt level of National Highway Authority is likely to come down substantially. Also, certain measures were announced by the Finance Minister to address the difficulties being faced by construction companies. She has mentioned that the insurance companies will be allowed to provide surety bonds, bid bonds for construction activity. IRADA, the Insurance Regulatory Authority, has been mandated to look into these aspects. They have formed an expert committee, and the recommendations of the committee have been already approved by the Insurance Regulatory Authority. Now, the surety bond business will be taken up by general insurance companies. They are working out the modalities. But in short, what it means is construction companies will have either avenue of bank guarantees or bid bonds available to them in order to take care of various bidding for various projects. As you know, we had a lot of difficulty in terms of bid bonds and bank guarantees, mainly because banks were not very willingly coming forward to support construction activity. But now either avenue, either window is being opened, which is a very good thing for construction companies like us. And also, the government has mandated the construction contractors' bills, the running bills, should be settled in 10 days. And if it is not done in 10 days, at least 75% will be paid on the 10th day, and the balance after the issues are resolved. This is also a very good step in the right direction, mainly because most of the construction companies suffered a lot because of delay in payments by various government agencies. This will improve our liquidity and our cash flow immensely if implemented properly. It is a central government directive, so most of the central government agencies will implement them definitely. But at state level, what is going to happen, one has to wait and see. But at least definitely it is a step in the right direction. And also, because of COVID, they have permitted the reduction in the performance guarantee up to 3% of the project value, as compared to 10% and in some cases 5% uniformly up to 2021. And now government has extended that for one more year, which means for the next 12 months, the performance bank guarantee requirement will be only 3% of the project cost. So these are all very good measures. And as you know, NCC is a frontline company, well diversified order book, having a foothold in almost every sector of the construction business. So we are nicely poised in terms of going into a higher orbit of growth as far as FY23 is concerned. As far as current year is concerned, as you know, the Indian economy is likely to grow by about 9%, whereas we are likely to report a top line growth of at least 25 to 30%, which is very commendable despite phase 3 of the COVID and also phase 2 in the first quarter of the current financial year. So our thought process is company is having a strong balance sheet, payment cycle has improved, bank guarantee limits are also available. Some cross talk is coming.
No, sir, you may please proceed. Thank you.
Yeah, okay, thank you. So these are all big positives, and also we started bidding for bigger projects like the bullet train packages. Each package is of the size of 10,000 crores, 15,000 crores, in some cases even 20,000 crores. And for that kind of projects, we require bank guarantee limits in good measure. And if surety bonds are made available by insurance companies, we will tap that source also if necessary. And we are comfortably placed in terms of funding for our projects. Recently, we have concluded joint documentation for a total limits of 13,200 crores, out of which about 10,000 crores is the bank guarantee limits, about 1,000 crores is the LC limits, and the balance 2,200 crores is the working capital limits given to us by our consortium of banks. So we are on a higher orbit of growth. We are at a sweet spot in terms of taking the opportunities going forward. I thought I will share with you in my opening remarks. Now I request my colleague, Mr. Krishna Rao, who incidentally is the CFO of the company, to tell you about the third quarter performance of the company. Over to Krishna Rao.
Good evening to you all. To add some more opportunities opened up by the finance minister to the infra industry. Har Ghar Nal Se Jal, that is 60,000 crores have been allocated towards 3.8 household crores, and houses for all under the PMAY 80 lakh houses funds allocated is 48,000 crores, and PM Development INE 1,500 crores for the Northeast have been allocated. These are some more which NCC is going to have business opportunities. Now I wish to briefly explain about that the order book. Order book at the beginning of the financial year is 37,928 crores. Orders received during 9 months is 9,638 crores. Works executed during 9 months is 7,356 crores. Order book stands at end of the December 40,210 crores. Now I wish to give the numbers division wise. Building division at the beginning of the financial year stands at 21,157 crores, represents 56%, and the closing is with 24,510, that is 61%. Road stands at 1,954, that is 5%. Closing at 1,999 crores, that is 3%. Water and railways, at the beginning it was 19%, closing is 20% with 8,052 crores. Electrical division is at 7% at the closing order book of 2,676, and irrigation stands at 3%, 1,296. Mining division closing order book is 2,335 crores, and all others together 229, totaling to 40,210. Now I will take up that the third quarter, the operating performance. We have achieved a revenue of 2,724 crores compared to corresponding previous year quarter of 1,943 crores with a growth of 40%. And gross profit we have achieved for the quarter 463 crores as against 377 in the corresponding quarter. EBITDA we have achieved 293 crores with a growth of 22%. PBT we have achieved 130 crores and growth is 15% compared to corresponding previous year quarter. PAT of 91 crores. The PAT we have achieved 91 after providing 20 crores for impairment of the investment of the one of the international companies. Now I will take up that the 9 months performance. 9 months revenue is 6,859 crores as against 4,733 crores with a growth of 45%. Gross profit we have achieved 1,203 crores in 9 months as against 950 crores. Growth achieved is 27%. EBITDA is 729 crores as against 565 crores. Growth is 29%. PBT 330 crores with 75% growth. The PAT for 9 months to 47 crores, growth of 69%. And there are certain peculiar specific nature in the corresponding previous year. 2 issues are there. One is that the claims. Claims we have accounted in the previous year to the tune of 120 crores, and a tax credit of 32 crores we have taken based on the assessment for 2018-19. Now that the finance costs on standalone basis, there is an increase of 10 crores despite the growth of 40% compared to the previous corresponding quarter. And this we have achieved. There is a reduction in interest cost. Mobilization, we have received 200 crores more during the quarter, and the mobilization advance interest is more by 4 crores compared to corresponding previous quarter. And for meeting the increased business requirement for LCs and business BDs, commission is more by 5 crores. This is works out to total 10 crores. And salaries and allowances is more compared to corresponding quarter by 22 crores. These are the primarily, there is a increase in number of headcount, number one, and increase in the salaries on account of that, the increments. Administration is a normal 11 crores increase for meeting the business requirement. And I will take up the 9 months. One moment, please. The finance cost for 9 months is there is a reduction by 4 crores. This is primarily lower interest on the loans despite the more utilization of the working capital, and interest on mobilization and bank charges is more by 5 crores. Rate of interest for 9 months stands at 8.79%. And on a consolidated basis, the performance for the quarter is revenue 3,033 crores with a growth of 41% compared to 2,151 crores of the corresponding previous year. And the gross profit we have achieved 464 crores, a growth of 13%, and EBITDA 276 crores, and we have achieved growth of 8% as against 256 crores. PBT 126 crores, growth 2%, and PAT is 76 crores with a growth of 7%. And for 9 months, revenue achieved is 7,717. We have achieved a turnover growth 48%, and the gross profit 1,262 crores as against 1,041 crores. Growth achieved is 21%. EBITDA 754 crores for 9 months consolidated, growth of 23%. PBT 352 crores, and we have achieved growth of 67%, and PAT of 240 crores, growth of 59%. The exceptional, only one exceptional in 9 months is we have received additional area for the Jubilee Hills landmark, whereby we have recognized income at 34 crores. That is only that the exceptional during this 9 months, that is in Q2 of the current year. And the subsidiary companies and jointly controlled the company's turnover vis-a-vis that. NCC International, we have received arbitration award, and based on that arbitration award, we have reversed certain WIP to the tune of 34 crores, and the loss achieved in that company is 44 crores. Urban infrastructure turnover is 89 crores and a PAT of 8 crores. OB infrastructure turnover of 14 crores and a PAT of 5 crores. Pachwara mine coal mining turnover of 249 crores, a PAT of 7 crores. After elimination of the consolidation adjustments, the total turnover stands at 309 crores with a loss of 7 crores, as against the corresponding quarter turnover of 208 crores and a PAT of 8 crores. Similarly, for the performance for 9 months of all these 5 companies stands at NCC International, the reversal stands at our 31%, WAP reversal, and the loss of 50 crores. NCC Urban Infrastructure to 68 crores turnover and PAT of 22 crores profit. OB Infrastructure 43 crores turnover and PAT profit of 13 crores. Pachivara Coal Mining 607 crores turnover and PAT of 18. As a result of eliminating the consolidation adjustment, 858 crores turnover and PAT of 13 crores as against the corresponding 9 months turnover of 491 crores and PAT of 19 crores. Now we will take up that the receivables. Receivables stands at 2,560 crores. The debtors collection period stands at 104 days as against 134 days as of March 21. Now the debt funds movement, debt at the beginning of the quarter as of 1st October is 2,102 crores. We have taken machinery loan to the tune of 12 crores and repaid working capital, machinery, long-term, etc. to the tune of 77 crores. The net, there is a reduction of the loan to the tune of 66 crores. And as a result, the debt position stands at end of December, 2,036 crores. For 3 months, we were able to reduce the debt 66 crores. For 9 months, for meeting the business requirement, we have utilized more working capital. That is working capital limit gone up by 247 crores. And for a consolidation, again there is a reduction of the debt by 87 crores during the quarter. AP, we have that the AP, there is a positive sign. We were able to collect 126 crores from April to till date, and in particular Q4 we were able to realize 35 crores. And bank guarantees, there is a reduction compared to April by 151 crores. This is that the status. With these are all from my end, and I request my colleague to take forward further. Hello?
Yes, sir. Sir, should we now open the floor for questions?
Yeah.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star 1 now. We have a first question from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Hi sir, congratulations on a good quarter. So my first question, the total order book of 40,000 crores, how much is the Jal Jeevan Mission project? And what has been the total execution in the JJM projects for 9 months and the third quarter FY22?
Mr. Durga Prasad, will you answer that question? Yeah, total orders from Jal Jeevan is 9,900 crores, and the turnover achieved so far is 851 crores. Because of that, the submission of the DPRs, there was a delay. Now the progress is at full swing. We will be able to achieve good turnover Q4 and next year onwards.
So how much is the yearly turnover you're expecting to do for next year in this project, sir? What is the duration of this order book and how much we are budgeting to execute next year in FY23 from this?
If the budget exercise is yet to take place, once we were able to complete, probably we will be able to give the more numbers,
Okay.
but around 5,000 crores probably we may plan, but not materially.
And for 9 months, we have done 851 crores from this order book of 99.
That is only in the last 1.5 months because of that the inordinate delay from the government side in finalization of the DPR.
So you're saying in the third quarter, you have executed 851 crores of revenue from this order book of 9,900 crores?
Yes.
Oh, great. So now the execution seems to be picking up. So this is the kind of run rate we should be able to maintain, sir, with 900 crores, which you have achieved in the last quarter now?
We expect.
Okay. Just for the second question is, in the first quarter FY22 call, you have mentioned that about 290 crores worth of payment should come in from winding up of the international operations, and you were expecting to realize 50% of that, about 150 odd crores by December 22, and rest in FY23. So any update on, have you received that amount? If you can just update on the winding down of international operations and what the status of receivables and payments used from there.
Sir, will be able to take up?
Yeah, Durga Prasad, can you take up?
Parikshit, we are kind of completing minor variance order in Oman. So we'll be completing it in this quarter. Then completing defect liability period, settling the other claims, receivables, and disposing of assets, etc. at project sites, and will be taken up next financial year. So whatever we estimated current year will been postponed to FY23. So winding up, completely exiting international business, etc. takes place in FY23. So we have to wait for some more.
Okay, just one more thing on the real estate deals which we are expecting to release from the sale of the land. So has it come in, and if you can quantify how much amount has come in? And lastly, if you can also talk about AP order book, what is the current order book there, and how are the orders moving or they are still slow moving? So these were the last two questions.
So as far as NCC Vizag Urban is concerned, though management hadn't, envisaged some inflows during the current financial year, so that also didn't take place. So there are some, the investor could not mobilize the resources in time, so there is slightly delay. So what we estimated, the same things are getting postponed. So this also will be realized in FY23 only. So we'll come back to you with clear plan during next call. So management is working on it.
But there is a positive development in the sense that we have paid the revenue share to AP Housing Board as per the consultant's report, and also we got the land registered in our name. Now it's a freehold land, 97.8 acres of land is in our name, and the land value has gone up substantially in Vizag. The current market value of the property is not less than 500 to 600 crores. Now we are looking at how to monetize that. Maybe I will look at bringing a investor into the company and take up the development. Well, one big is the land has become freehold and it is registered in our name, and we are the legal owners of the property.
But what happens to the previous deals then? I mean, is the deal still on or it's now over? That
deal is in abeyance. That's why we are telling. We are discussing with other like-minded investors, but it will take some time. But the positive development is the land has become freehold.
Okay, sure, sir. And just on the AP order book, if you can comment how much is the order book and whether it is normally under execution or there's some delays in execution there due to payment issues.
AP order excluding the new projects is only 1,155 crores. And considering the new projects, the total order book as at the end of the December is 4,389 crores.
And so what is the revenue for 9 months from AP orders, AP order book?
It's only 9 months we executed about 210 crore. So we are, as you are aware, AP TIPCO, capital city projects, etc., slow moving. So we are more concentrating on funded projects like ADB, AIB, and as you are all aware, so state government is focusing more on welfare measures, etc., and the COVID emergencies. Still, they are not focusing on capex spending and all. So we expect AP also will start focusing on spending capex, releasing old dues, etc. in FY23. However, as CFO told, we have released about 126 crore during 9 months of FY22. So we are further confident of releasing our pending dues.
Sure, sir. Thank you.
Thank you. In the interest of time and fairness to all participants, ladies and gentlemen, please restrict questions to 2 per participant. If you still have more questions, kindly join the queue afresh. We have next question from the line of Shravan Shah from Dolat Capital Markets. Please go ahead.
Thank you, sir. Sir, the first question, when we said that we are still guiding 25-30% for this year, so if I just do the maths for fourth quarter, it seems it is just a flattish. So is it so? Are some of the projects still not moving? That's why, or is it the minimum? We can expect some growth in the fourth quarter, and at the same time, in terms of the margin, previously we were talking about 11.25% for full year, but till 9 months we have done only 10.7. So will the margin, are we reducing margin guidance there?
Yeah, as far as the top line is concerned, we have given there was no guidance from the board, but we have indicated that we are looking at 25% top line growth in FY22. That is to reach a level of about 9,200 crores on standalone basis. Now we already reached about 6,700 crores on standalone and about 7,700 crores on consolidated basis. And the fourth quarter numbers should also be strong as compared to the third quarter numbers. So definitely the standalone turnover for FY22 will be in the region of 9,800 to 10,000 crores, which is definitely more than 30% growth on a standalone basis. As far as the margins are concerned, as you know, the commodity prices have gone up very high. We all suffered. Many construction companies are also reporting lower EBITDA margins. We believe it is going to be a temporary in nature. In the first 9 months of the current year, we reported EBITDA margin of 10.8% compared to more than 11% in the previous year. But going forward, the commodity prices are going to soften, and that will definitely help us to improve the EBITDA margins in the next year, that is FY23.
Okay, sir. So the next is related to in terms of the inflow. So previously we were looking at close to 14,000. So we have received 9,600. So are any L1 orders, and what's likely still, as you mentioned in terms of the budget, more capex is given. So is it possible that still we can reach to 14,000 kind of inflow number this year? And I also need some of the balance sheet numbers in terms of the retention money, inventories, payable, loans and advances, investments. So that's it from my side.
Yeah. Krishna Rao, can you give?
Yeah. The loans and advances.
Yes, sir.
One moment. Before that, you are asking about the order book, no?
Order inflow, sir.
In 9 months. Definitely, some more order accretion is expected in the current year, current quarter, that is fourth quarter.
though we have not got many substantial orders so far in the first month of the fourth quarter, but some more orders are expected in this month and the next month. We are confident we will be able to reach the targeted level of 14,000 crores by the end of the current financial year. The other question, Krishna will answer.
Okay, sir.
Yeah, the loans and advances is 1,190 crores and the retention money 2,000 crores. What is the next question, please?
So I needed the loans and advances and investment in the group company. So you said 1190 is the combined number of both loans and advances and investment to group company.
Yeah, the total group company loans and advances and investments together stands at 1,400 crores.
Has the number gone up versus the last? I can see only 1270 odd crores. So it has gone up 100 crore plus in the last one quarter.
Yeah.
98. Yeah. Proceed, sir.
We have given a loan of 100 crores to NCC Vizag Urban for payment towards the revenue share to the government agencies. That's why the loans and the advances to the group companies has gone up in the third quarter, but we believe it is only temporary in nature. In fact, we are actually expecting NCC Vizag Urban to repay the loan taken from the parent company in this quarter itself.
Okay, sir. Other numbers are inventory, payables, and how much capex till now we have done, and we were looking at 250 odd crore for full year. So what's the number there?
The inventory is 622 crores, and the capex is 45 crores for the quarter, and
it is 146 crores for 9 months period.
For 9 months.
And budget is about 250 crores.
Okay, and payable number, sir?
Yeah.
You mean trade payable?
Yeah, trade payable, sir.
Trade payable is 3,700.
3,700.
Yeah.
Payment to suppliers is 1,239 crores, subcontractors 774 crores, payables for expenses 916 crores, retention payable is 778 crores. Total is 3,708 crores.
Okay, and mobilization advance, you said it would be around 1,850 crore.
Yeah, mobilization advance
1845 crores.
Yes.
Okay. Thank you, sir, and all the best.
Retention money is 2,080 crores.
Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, please restrict questions to 2 per participant. We have next question from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you for the opportunity. Sir, my first question is again on the Vizag land sale. So we just said that the property, the revenue share was supported by us, but the registration in our name as a freehold land, was that money paid by us or by the investor? And what will happen to that? Because now if the deal is kept in abeyance, then what happens to that money, sir?
That registration money is also paid by us.
Okay.
All these monies, actually we are looking at an alternate investor, though the door is not completely closed with the original investor. In fact, he was driving the deal. He was close to the state government. He was able to get us the cabinet approval, etc., to convert the land into a freehold land, from development land to freehold land. That is a big positive for us. The unwinding of this whole transaction is likely to happen in this quarter.
So, sir, from a cash flow perspective, can one think that you get the money which you have paid for the registration and the revenue share, and then the deal value, as you had indicated, probably it remains in that range, right? 300 plus crores. I mean, is that how you think about?
Yes, yes, absolutely.
So basically, we are talking about a 300 plus roughly a 200, so something like a 500 crore, all in all, as a cash which will come back from December 31st.
It is not 200, including registration. It's about 170 crores, and plus the 325 that we were targeting earlier. So all that will come back to us, maybe partly in this quarter and balance in the first quarter of the next financial year.
Sure. So my next question is on the JJM. We indicated a very good turnover of 850 crores in the quarter. I see that obviously the debtor number has remained flattish on a quarter-on-quarter basis. So have we got paid for this, the revenue, or how things have happened? So basically, have we got paid for this kind of a steep turnover that we've done in JJM?
Krishna Rao?
Yeah. Collections have really gone up during the Q3, and including the Telangana and the AP also. And as a result, we were able to reduce the debtors outstanding to 94 days from that of 134 days.
Sure. So specifically for JJM, if you can indicate whether you got partly or substantially paid for the revenue done, or that is still to be paid?
Sorry, which one?
JJM, the UP Jal Jeevan Mission.
Jal Jeevan Mission, sir.
Yeah. Yeah. Jal Jeevan Mission, the realization is expected in Q4, partly, and the balance is going to be in 22-23.
You see, Jal Jeevan is sponsored by the central government. 50% of the project cost is borne by them. They have made it to take into a mission mode, and they are implementing across the country portable drinking water to every household in every state, in every village, etc. So payment cycle should not be much of a problem. As we were explaining in the beginning, there was a delay in execution to take up, mainly because they have got an elaborate process of DPR preparation, DPR approval, and giving mobilization advance district-wise and allowing us to start the work in that particular district. So almost 8-9 months time has been lost. But now the speed and pickup is there, execution is there. We are confident even the payments will also be coming.
So just a last question. Any more losses expected from the international with respect to this kind of a loss that we saw for an arbitration order, etc.? So is there any more that can come as we close the business?
No more loss is expected. The total operations are closed. Only the realization expecting back in the next 3 quarters. We will be able to get back. Our total operations are over.
So you said you will be able to get back something. So what is the amount that you are looking to get back, sir?
Around 110 crores we have to get back this quarter. To Q3 we are expecting the same. Repatriate only the procedural aspects we need to take due care, for which we have already applied to RBI.
Sure. Okay. Thank you.
Thank you. We have next question from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Thank you, sir. Thanks for taking my question, and congrats on a great execution again. Sir, 2 questions from my side. One is, sir, that given that we do not expect the Vizag land deal to maybe close this year, and plus we have given around 100 crores to the Vizag subsidiary also, what do you expect the standalone debt to be at the end of the financial year? Right now we are at 2,000 crores. Earlier we had expected that we might end the year at 1,800 crores. Do you think 1,800 crores is still possible? Another 200 crores of reduction in debt is possible in Q4?
Yeah, that is what we are looking at. Normally what happens is the payment cycle improves in the 4th quarter, particularly in the month of March, because most of the government agencies, because their budget allocation for the year is coming to a close, they want to utilize the budget in full, and we get very substantial payments. particularly between 15th March to 31st March. So those flows are going to be available to us, and that we park in our loan accounts with the banks. Despite 2,000 crore outstanding debt at this point in time, that is at the end of the third quarter, we are confident for the year as a whole, the standalone debt will be around 1,800 crores only.
Got it, sir. Heartening to hear that. So secondly, sir, if I look at our numbers, our consolidated PAT is at around 84 crores as compared to the around 105 crores of PAT at the if I remove the adjustment, then we are looking at around 105 crores of PAT at the standalone level. Generally, we are not reporting much subsidiary losses, so our standalone and consolidated PAT are almost the same. So any specific reason? The 20 crore impairment that we have taken in the standalone level as an exception, is that coming at above EBITDA level in these consolidated numbers?
No, we see our international operations reported losses, that is one reason. In the third quarter, about 43.4 crores of loss we have reported. NCC Urban has reported a profit of 8 crores, and our NCC Infra also reported a loss of 1.55 crores. So all these put together, it has resulted in a loss of the subsidiary company's operations. That's why the consolidated profit is less than the standalone profit.
You mentioned 43 crores of loss in the total subsidiaries.
In Oman and Dubai put together, in the third quarter.
Okay, in Oman and Dubai.
Yeah.
And sir, as I think Ashish just asked, any more losses that we expect from these subsidiaries in the coming quarters, or are we done with the losses that we want to report?
See, as far as international business is concerned, it is coming to a close, and we are confident. We have got enough machinery there, enough payments are coming from the government agencies like final bill settlement, retention money payment, etc. So we are very confident of whatever monies that we have invested in both the international subsidiaries will come back to us in the next 12 months. And we are not envisaging any further losses in the international business. But as far as the domestic business is concerned, because some of the projects are long gestation projects, they may report some losses for some time. Though OB Infra has reported a profit this year, in the third quarter they have reported about 5 crores of profit. We hope that will continue. Pachwara Coal is also doing well. They have reported a profit of about 7.3 crores in the third quarter. That is likely to continue. So I don't think there is going to be any further loss in other businesses. And more importantly, NCC Urban also is consolidating its operations. They are likely to report good profits in the fourth quarter as well.
Got it, sir. So lastly, any view that you can provide on some of the large orders? So, I mean, in bullet train you mentioned, but I think most of the packages that we bid for, we were not able to basically be declared as L1, and most of the orders actually went to L&T. On similar front, I think we are also looking at Central Vista orders. So what are the kind of orders that we are looking at? And a related question, recently Ganga Expressway projects was announced on BOT basis. Given that we have done expressway work in the state of UP before, if we were given an opportunity, or are we exploring the opportunity to work maybe as a subcontractor to Adani or the Adani Group, or maybe some other group for that kind of a project, or that is a strict no for us?
First of all, bullet train we are not successful, I agree. We have got a good partner, but recently we bagged a big order of about 2,167 crores for the Bangalore metro projects connecting to the international airport. About 3 packages we are doing in Bangalore. So that kind of orders are definitely available, and we keep bidding. Some we win, some we may not win. We cannot say that. As far as BOT is concerned, we are very careful, as you know. We are focusing more on cash contracts, particularly the road projects like the Nagpur-Mumbai Expressway, where our package is almost complete despite pandemic, despite stoppage of work at various locations, we were able to complete the project in time, and definitely we are also looking for a bonus. So those kind of projects we are interested in. Ganga Expressway, I cannot comment on that because that is a BOT project, so we didn't participate because that is our corporate policy. But hybrid annuity projects, definitely we started bidding. Only it is a matter of time before we get some projects.
Right. So on the Ganga Expressway, my question was, the bids have already been done on a BOT basis by Adani Group and IRV Group.
No, I cannot comment on that at this stage.
Okay, sir. Sure. Great, sir. Thank you so much for taking my questions and wish you all the best.
Thank you.
Thank you. We have next question from the line of Rohit Natarajan from Antique Stock Broking. Please go ahead.
Yeah, thank you. Thank you for this opportunity. So my first question is more to do with the AP receivables portion. Can you give us receivables unbilled and retention money from AP state government?
Yeah, Durga Prasad.
I'll give you. Yeah, Rohit, good evening. Unbilled revenue is 368 crore. And trade
receivables and retention money?
Receivable 412 crore. Retention money 240 crores.
Okay. Sir, if I'm not mistaken, this amount was a little bit lower last quarter, but there is no progress it seems. This is for the legacy orders or there are some ongoing projects to add to it?
No, these are all legacy orders only.
Okay, so there is no progress essentially.
No, there is slowly, as I told, this includes old orders which are funded by ADB, AIB. See, those funding agencies, they are releasing funds to AP government. The AP government has to give its margin and then they have to release the funds. So there are some delays from the government side. We expect AP government to release all these dues in the current month or by the end of March. So, last 9 months we have received over 126 crore from AP clients. So we are continuously pursuing the market.
Sure. So my next question is more to do with the kind of order backlog that you have. Its normalization is largely done. A lot of projects are on stream. If next year, if you are looking at I know there is no official guidance that will not be coming through, but still for the kind of order backlog that we have and the run rate that we have, 12 to 15,000 crore looks possible. And if that is the kind of number execution, if you have in mind, what kind of working capital buffers are we looking at? Currently, the working capital utilization limit is, last quarter we had nearly exhaustion of the working capital limit. And now we are talking about increasing that working capital limit. What exactly is the position over there?
You see, we are yet to finalize our business plan for FY23. So it is difficult for me to do any numbers for the working capital and also for the turnover unless we work out an elaborate business plan based on the closing order book of the current financial year and expected orders in the next financial, etc., etc. We do it in a very systematic manner, present it to the board, and based on that, we will come to the investors in terms of top line growth and bottom line growth for next financial year. So my request is you have to wait for some time, but going by the general trend and going by the trust being given by the government for development of physical infrastructure and the construction companies are definitely going to be benefited by this. It will not be surprising if we can report 15 to 20% top line growth compared to current financial year.
Fully appreciate that part, sir. If you could help me with the working capital utilization limits as of now, that could probably be a good indicator to see what the growth you can do in next.
See, working capital, we always keep a cushion of 300 to 400 crores in our cash credit accounts where the limits are set up by the banks. That we use it as an emergency as and when required. Even now also, for example, we have got 2,200 crores of working capital limits but actual utilization is only over 1,800 crores. That means there is a headroom of about 400 crores available to us if required. So that kind of cushion is likely to be there. And also, you have also to keep in mind, whenever I get a new order, I am getting about 10% as mobilization advance from the client. So that is also going to help me in terms of having enough liquidity for executing the project.
So all these things, sir, the non-fund based limits, historically you had close to 9,000 crore or maybe 8,800 crore, and you had a good utilization over there as well, like 7,000 crore was utilized. What number is the situation over there?
I think you have missed my opening remarks. Now we have got 10,000 crores of bank guarantee limits, 1,000 crores of LC limits, and 2,200 crores of fund-based limits. The total size of the consortium is 13,200 crores. As far as bank guarantees are concerned, out of 10,000 crores of limits available to us, we are having a headroom of about 2,500 to 3,000 crores at this point in time.
Sure, sir. I appreciate it. Thank you. Thanks a lot.
Thank you. We have next question from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question, sir. Sorry to harp on this Vizag issue again. So just want to understand, I understand, that the earlier deal is in abeyance, but does it mean, you would look for a new buyer, or there could also be a situation wherein you could enter into a JDA arrangement and then develop and then get the money in place the way we did it for our Hyderabad asset, wherein you enter into a JDA and you would get to have your share of area over a period of time?
We are exploring all the possibilities. We prefer to have an investor who can buy us out. That will be our first preference. But at this point in time, as I was telling, the positive development being the land is registered in our name. Now NCC Vizag Urban planning to raise a loan of nearly 200 to 250 crores. And if that money is received at NCC Vizag Urban level, they will repay the debt taken from the parent company, that is NCC. So as far as NCC is concerned, the exposure to group companies will come down to that extent, and that most probably is likely to happen before the end of the current financial year.
And fair to assume there will be a moratorium because NCC Urban won't have money to be able to pay interest at least for the time. In the time, you get to find some investor.
No, I cannot talk about that right now. All those things will work out. The lender will also look into the aspect and then only he will fund it, is it not? All that will take care.
Okay. And sir, in terms of AP exposure, the number that Durga Prasad gave, this is gross number, right? There will be some mobilization advances also available with you. So what could that number be? As of mobilization advances 127 crores. Sorry, how much?
127 crores.
127. And I think last quarter we spoke, we were talking about, AP TIDCO and City Capital Agency had secured some approvals for borrowing limits, right? 6,000 odd crore rupees and 3,000. So have they been able to kind of manage this fundraising, and which is how they were supposed to make us our payments, or is it still in progress?
Yeah, so they are discussing with various lenders, and lenders also have taken information and project reports, etc., from the government. So they are evaluating the proposals, and as far as AP TIDCO and ADCL officers, they are confident of tying up the loans before March. We are also eagerly looking towards tying. Once it is done, all our dues will be cleared and we can complete balance work also. So ADCL and all working.
Sure, sir. Could you please help me with the cash and bank balance number as of 31st December, please? And that's it from my side. Thank you.
We have been talking for the last 1 hour, and now we will take only 2 more questions from the participants.
Hello.
Hello.
Yeah, tell me.
Sir, cash and bank balance on the balance sheet.
It is about 535 crores.
Sorry, how much? There's some disturbance.
537.5 crores. cash and bank balance, including margin money for bank guarantees.
Okay, sure. Thank you. That's it from my end. Thank you.
Thank you.
So this will be the last question, please.
Thank you. So we take the last question from the line of Parvez Akhtar Qazi. Please go ahead.
Hi. Good afternoon, sir. So just one question from my side. What is the impairment that we took this quarter, and this was in which subsidiary?
What is that? Come again? It's not clear.
What was the impairment, quantum of impairment that we took this quarter, and it was in which subsidiary?
Krishna Rao, can you?
It is 20 crores towards NCC International Oman. Upon receipt of the arbitration award, that is where we have concluded and impairment has been taken care.
Sure, sir. Thank you.
Yes.
Thank you.
Thank you very much, sir. Ladies and gentlemen, that was the last question. I'd now like to hand the conference over to Mr. Mohit Kumar from DAM Capital for closing comments. Over to you, sir.
Thank you everyone for participating in. Thanks to the management for giving us the opportunity. Would you like to, sir, give a closing remark before we close the call?
Yeah. We thank DAM Capital and Mohit and his team for hosting this conference call. And we also thank all the participants for their enthusiastic participation and a lot of questioning. If any participant is not able to have a chance to ask the questions, we request him to contact us, either Mr. Durga Prasad or myself, or you can send a mail to us. We will be glad to answer your questions. With this, I will close the call, and I thank everybody once again. Thank you.
Thank you, Mr. Vikram, and thank you, Mr. Mohit.
Thank you very much, sir. Thank you, gentlemen.
Thank you, all participants.
Thank you very much. So, ladies and gentlemen, on behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining with us, and you may now disconnect your lines.